properties backed by Ong Beng Seng has just upped its offer on SPH to 236 and 240. Now, in today's video, we are going to look through the latest in corporate acquisitions, corporate takeovers, as well as corporate mergers. So stay on to find out whether this new offer at 240, 236 actually valued SPH for what it should be, and what would shareholders be looking for going forward into the next year in terms of corporate mergers. Once again, if you like what we see, you can smash the like and subscribe button to our YouTube videos and stay on to the end because we are giving you one of our GCP Global special offer Christmas offering. When we have, yes, if you look at this side, this is actually Mr. Adrian Chu, the CEO of ESR REIT, that will address us as special guest honor on our 18 December. Ong Beng Seng has raised its SPH bid price to 236 all cash and 240 as a combination of cash plus SPH units. So does it come as a surprise? Will there be a counter bid? In fact, just to take a step back, last Wednesday, when Keppel sweetened its bid, this is what the CEO actually mentioned. Now, it's very amazing and it's very amusing. Okay, let's see what he says, okay, in greater detail, all right? Now, so just to quote, right, from here, this quote is that Keppel Chief Executive Lo Shinhua told a briefing yesterday, we have improved our final offer not because of the competing bid. What? You mean if there was no competing bid, you were willing to pay up to almost 400 million for the same assets? Well, his justification was that economic conditions have improved and we saw improvement in SPH financial performance just 2 months ago. Well, it's amusing, right? Yes, ladies and gentlemen, that was me when I read the news last week. I practically fall off the swing. Ouch, my backside still hurt. So to answer the question whether there will be competing bid and whether in effect SPH is undervalued, let's look no further. Let's look at the audited financial numbers of SPH as of its latest financial year and close 31st August 2021. So that's practically 3 months ago. So ladies and gentlemen, if you look at the assets that is under SPH, under the property, rather investment properties, the associates, the joint ventures, because SPH basically have the bulk of properties, other than media, which is actually being stripped out. You notice they went on to a buying binge on aged home properties. That did not move the share price. In fact, that sent the share price higher because the borrowings increased. And then after that, they went into student lodging. To me, I think that is, if I need to identify one good asset in there other than SPH REIT, it is actually the student lodging, because the possibility of having it as a REIT is there. So maybe Ong Beng Seng sees that as what I see. Okay, so if you add up these assets, that's the investment properties, associates, joint ventures, the investment, cash, which I'll show you on the other slide, less of the borrowings on a long-term basis at 2.4 billion and the short-term borrowings of 686 billion, what do you get? Yes, okay, so if you add up, as I said, ladies and gentlemen, from the balance sheet in the last slide, 6.5 billion for the investment properties, associate 361 million, joint ventures 11 million, investments 516 million, cash is 743 million. You get 8.15 billion based on the latest balance sheet of SPH as of 31st August 2021. And then you less off the long-term borrowings. Long-term borrowings 2.4 billion, short-term borrowings is 666 million, which totals 3.105 billion. And the total number of, so the net value, that means if you take this minus this, it's this. And the number of shares that they had at the end of the last financial year is 1.591 billion shares, if you take this divide by this, actually SPH is theoretically worth more. So at 240, even the upward price, does it mean that SPH essentially is still undervalued? Well, that's what we actually focus at GCP Global, and this is what we continue to guide investors. So if you like what you see, do smash and subscribe to our like buttons, because there will be more. And I think essentially with respect to SPH, because of the certain attractive assets as I mentioned inside the investment properties, that is actually a student lodging, which is possibility en route for a good REIT listing. If the takeover vehicle or entity does see the potential in it, for which I see it tremendously, right? Then, and coming, guess what? It's end of the year. And essentially, we will be looking at the next event, which is actually, and we have the privilege of having Mr. Adrian Chu, the special guest on 18th of December when we have our masterclass. Mr. Chu is the Chief Executive Officer and Executive Director of ESR Fund Management. As you know, right now, ESR REIT is proposing to merge with ARA Logos. Now how does one look at corporate mergers, corporate takeovers? How does one gauge a fair price? How does one look at the basis as well as the to understand whether a fair value is being given on the table? Remember, most of the time, the competing companies will rely on the IFA, but to what extent is the IFA report relatable, understandable to common shareholders like you and me? So at GCP Global, we make this understandable for you. Now, guess what? And because it's Christmas, now we donate basically the proceeds, of this talk to charity. So, in order to qualify for a free ticket, if you're already a subscriber of GCP Global, our YouTube channel, continue. Or if you're not, then you subscribe, like, and share this particular YouTube video. Okay, then you try to actually get one of your friend or family members to sign up as a subscriber. Thereafter, you email us at gcpglobalsg@gmail.com. Give us your contact number, your name, as well as the email address, as well as the name of your contact who has signed up to be a subscriber. And then just before, in 1 month's time, we will go into a lucky draw to pick the winner for a free ticket to attend our event on the 18th of December, where we will actually look at the Loser effects of REITs mergers. As you know, Loser basically looks at the positive and the effects that may not be prevalent or apparent to the normal shareholder. So once again, do like our video, like and share, and do get one of your family members, especially your loved ones, to join in our YouTube video. And see you again next week, where we look further into corporate mergers, acquisitions, and possibly an update on SPH if there's a competing offer. Cheers.